stablecoin adoption will grow is really driven through merchants and payment companies. We're seeing PayPal, Visa, Stripe all starting to replace antiquated digital financial rails with crypto blockchain.
Are we seeing any signs that institutional capital is rotating into altcoins right now?
We could see more flows going in.
What will be the most dominant digital asset in the financial space in the coming years? We'll talk about this theme and the future of crypto adoption with Dylan Bane. He's a senior enterprise research analyst at Messari. Check out his work, link down below. Dylan, good to see you. Welcome to the show.
Good to see you, David. Thanks for having me on.
I want to get your reaction to the Genius Act that was passed earlier in the summer. Huge support by all members of Trump's administration. Vocally, Trump has been long a proponent of the Genius Act, says a White House statement, saying it is going to make America the undisputed leader in digital assets. Nobody will do it better. It is pure genius. Digital assets are the future, and our nation is going to own it. This is a statement from Scott Bessent, Treasury Secretary. Stablecoins represent a revolution in digital finance. The dollar now has an internet-native payment rail that is fast, frictionless, and free of middlemen. This groundbreaking technology will buttress the dollar's status as a global reserve currency, expand access to the dollar economy for billions across the globe, and lead to a surge in demand for U.S. treasuries. Before we drill down and evaluate each of these statements and assumptions, let's just go back to Trump's broader statement here. It's going to make America the undisputed leader in digital assets. What is this future that the administration is painting and perhaps wants to see? Why ultimately has the Genius Act been passed?
Yeah, so I think it's clear from the administration's statements that they see stablecoins and broader crypto rails as a way to expand access to the US dollar. So what we're seeing globally is somewhat of a push to de-dollarize a lot of the world. We see this with BRICS. We see this with the emergence of economies in East Asia and around the world. And a lot of the US's international power and economic power lies in retaining dollar dominance and having economies continue to use the asset. And stablecoins through crypto offers probably the easiest and lowest friction way for anyone around the world to access the US dollar. And because crypto assets like Bitcoin and Ethereum are very volatile, people who want easy access to currency on chain, just frictionless ways to do cross-border payments or just hold their own assets, see US dollars as the stable way the most stable store value, basically. And if you can expand access to the dollar on chain, I think the administration sees that, especially Scott Bessent. And this could be the primary way to retain dollar dominance globally through stablecoins.
Okay. Well, why ultimately do we need the dollar on chain? If the issue is faster remittance, faster cross-border payments, faster B2B payment rails, why can't we just revamp the traditional SWIFT system, improve the technology, and make it faster?
Yeah, that's a great question. I really think it comes down to coordination. So for decades, the financial system has been evolving. There's kind of a disconnect between the pace of advancement in technology and regulatory developments. So what we see is a bit of a non-intuitive system financially globally, where regulations really just haven't caught up with technology. So you could, in theory, just transfer from one bank's database to another bank's database in another country very easily. But because of laws, because of coordination costs and doing settlement and reconciliation and all these more antiquated processes from prior decades, it's very difficult to coordinate all of that across the entire world. Crypto and stablecoins come in, and you're just able to instantly transfer your assets from one wallet to another across the world with no complications through, decentralized verification and validation and just general crypto technology. So it's really just overcoming coordination costs.
So we know that the wave of stablecoins is coming. Let's just start with what that will look like for the average person. In what form will stablecoins arrive for the average Joe and Jane in America? In other words, how will it change our lives on a more fundamental level?
So I think within the US, how stablecoin adoption will grow is really driven through merchants and payment companies who are transitioning their technological stack to basically crypto and blockchain. So, for example, we're seeing PayPal, Visa, Stripe all starting to build their own chains, all starting to launch stablecoins or integrate with other partners in order to basically replace antiquated digital financial rails with crypto blockchain. So what we're going to see is, I think the average Joe might not notice that they're even using stablecoins for payments, but what's going on the back end is everything is being done on chain. I think that's the future we're going to first. And then down the road, we could see mass adoption of wallets and direct crypto interfacing once it's more seamless. But I think it's really going to be on the back end first.
What does this mean for investors? The stablecoin trend rather, is coming. Assuming it's here to stay, Dylan, how do investors play this trend?
Right. So I think for public investors, it's a bit more complex, but the largest opportunity right now, I think, is in the venture capital markets. Well, growth equity, just transitioning payments from, fintech, just the conventional financial system to new stablecoin issuers, companies just adopting crypto more rapidly than others. I think the play for investors is really seeing who is the most tech forward, most forward looking in terms of crypto adoption, and figuring out who has distribution advantages, who can integrate vertically best along payment rails, and just the financial system broadly to best own the future of payments and just financial transactions.
Before we continue with the video, let me tell you about a very important topic. Bitcoin. It's had a 10-year compounding annual growth rate of over 80%, and it's been one of the best performing assets in the world. That means there's a high opportunity cost to spending your Bitcoin savings. Now, with today's sponsor, People's Reserve, and their revolutionary Bitcoin-powered financial products, you can now borrow against your Bitcoin with no credit checks, no income verification, no taxable event, and no rehypothecation risk. Their flagship product, the Bitcoin-powered mortgage, is redefining home ownership for Bitcoiners. And here's the best part. Liquidation risk isn't tied to price volatility, only to non-payment defaults. This protects borrowers and lenders from the biggest risks in traditional crypto lending. With the advent of People's Reserve's revolutionary lending products, you can now unlock the purchasing power of your Bitcoin savings without having to give up ownership. Go to peoplesreserve.com, link down below, or scan the QR code here. Sign up for their newsletter and discover how to build wealth smarter. That's peoplesreserve.com. How would you, in 2025, evaluate algorithmic stablecoins versus reserve-backed stablecoins, which are safer, which have more potential for growth? People have been a little bit spooked by the Luna experience a couple of years ago and have been skeptical about the opportunities within the algo stablecoin space. Now, has that space learned from the Luna experience? Can we move forward from this?
Yeah, I think the Luna stigma is still widespread within the crypto and stablecoin spaces. So I think it hasn't really recovered yet. We're seeing experimentation with certain startups, but they really are not even close to rivaling fiat-backed stablecoins in terms of volumes or active wallets using them. So I think, we still need a few more years of, just getting away from what happened with Luna. I think this technical breakthroughs still need to happen, both on the economic side and on the crypto side, and to make algorithmic stablecoins work. And we're just not there yet. So I think the vast majority of activity and interest is in fiat stablecoins.
I want to draw your attention to state-backed or state-issued stablecoins. Wyoming made history earlier this summer in August by being the first state in the U.S. to announce a state-backed stablecoin, its own stablecoin, the Frontier Stable Token, FRNT. Let's just talk about this. Why Wyoming, and ultimately, can we see more of these across the U.S.?
Yeah, so Wyoming has been a leader in digital assets regulation for some years now. They've been at the forefront of tokenization and figuring out legal structures to bring traditional assets on chain. And I think them being at the forefront of creating their own, FRNT token is really a reflection of that historic legacy. And now that regulations federally and institutional adoption is really picking up, Wyoming has just been able to capitalize on that faster than any other government, just both due to having the knowledge from prior years and also just being a very innovative state in terms of financial instruments and regulations. You also see this with LLC laws outside of crypto, tax laws. Wyoming just tries to be at the forefront of that. So I don't know how other states will react. I assume they'll let Wyoming lead and then make decisions over time to see if something similar makes sense for them.
The issue of why the U.S. has been issuing stablecoins, state-backed stablecoins. We'll get to that in just a minute, but I want to get your thoughts on how private enterprises are going to react to states issuing stablecoins. How is Tether, for example, going to stay competitive in a world where states and perhaps even the federal government are looking into issuing their own?
Yeah, I think so. Tether has a very broad-based business in terms of demand. So a lot of it is we want stablecoins for centralized exchange collateral and crypto to do trading. Others are international cross-border payments. I think they have the reputation, they have the liquidity already in place, they have the partnerships in place where they stand to sustain their advantage, even if there is growth in state-backed stablecoins or federally backed stablecoins. And I think it's going to take a very long time until we see actual adoption or even implementation of state-backed stablecoins, aside from what seems like a pilot from Wyoming. And I don't think we'll see anything from the U.S. for some years. So I think Tether, Circle are probably well positioned for now, but it's certainly a risk for them in the long run. I think it's just not their main competitive priority. They're looking more towards who in TradFi is going to launch a token, whether that's JP Morgan or another large bank or asset manager that's actually going to, start eating term market share today.
Yeah, certainly you've seen the news that Tether is expanding gold reserves by I think 80 metric tons this summer and this fall. Any particular reason why they're diversifying now?
Yeah, I think so. They're looking also just broadly towards tokenization. So we're not just going to bring dollars on chain. We're going to bring gold on chain. We're going to bring equities on chain. We're going to bring fixed income assets, real estate. These are all the next phases of what we call tokenization of real world assets following dollars, which are the easiest asset to tokenize at this point. But I think Tether wants to remain at the forefront so that they don't lose out to other players who move quicker downstream of tokenization and eat up market share, just having more network effects between assets in the long run.
Okay, I want to talk about markets right now, and starting with Bitcoin. On-chain data has suggested that whales are accumulating Bitcoin in large numbers, while retail sentiment still remains relatively weak compared to institutional adoption. According to recent data from Glassnode, for example, the number of unique whale entities defined as those holding at least 1,000 BTC has risen from 1,392 to over 1,400 over the past week alone. This marks one of the highest whale counts recorded in 2025, signaling a resurgence in institutional or large-scale investor confidence. This is a flip from what happened a couple years ago. Is this divergence, do you think, sustainable ultimately for the markets?
I think in the short run, we're going to continue to see Bitcoin holding trend towards whales and large institutions. A lot of it's just asset managers, wealth managers starting to make recommendations to high net worth clients that they should hold 1, 3, 5% of their portfolio in Bitcoin. And as firms are looking to diversify, as there's more macro uncertainty, as there's shakiness in equity markets, I think people will continue to start to consider and actually start buying Bitcoin at this level. I think retail just doesn't have the same level of I'd say incentives to do the same. Like there's no drive that's causing them to buy Bitcoin in the same way that we're seeing from institutions.
What is retail interested in right now?
Yeah, I'd say within crypto markets, we've seen less new retail enter in the last year. It really has been institutional driven. I think a lot of it is just where the economy's at, where crypto is at. I think people were definitely burnt out from the last cycle, 2022. They've seen a lot of chaos on chain in this cycle. I think retail is kind of just staying put, not increasing their crypto inflows. I think it'd really take a sharp decrease in interest rates to start seeing retail start coming in again, or other, economic problems that we're not seeing yet. But I think there's no strong catalysts to drive retail into crypto more than they are at existing levels right now.
Well, okay. So a sharp drop in interest rates. What other catalysts could you see? So the Fed has cut interest rates by 25 basis points. We're speaking on Wednesday the 17th, right after the FOMC meeting. They haven't dropped by 50 basis points. Stephen Moran, the new governor appointed by Trump, wanted. Now, what do you think is going to happen to monetary policy over the coming months, and how may it affect the Bitcoin market, do you think?
Yeah, I'm certainly not a macro expert, so it's hard to predict. But I'd say if there is a further decline in interest rates, what we've seen historically is inflows from Bitcoin. And that was before institutions were starting to pile on into the asset. So I think we could expect to see more re-entrance into crypto from retail, both within Bitcoin and I think broader crypto now. Now that's more widely accepted, especially Ethereum and Solana, I think are strong targets that receive retail inflow. But aside from that, I don't see any strong catalysts in the short run, aside from either black swan events or just major economic, drivers that we just wouldn't expect to see in the short run.
The momentum for Bitcoin then, what is the trend going into the end of the year, do you think?
I would say it's going to continue to rise as long as institutions continue to drive their clients in the Bitcoin, as well as just the debt craze continuing. So I think it's likely to continue going upwards. And I think given very favorable regulatory developments in the last few months, I think that's going to really start building more and more, institutional inflows into Bitcoin. So I would expect it to be positive for the asset through the end of the year.
Are we seeing any signs that institutional capital is rotating into altcoins right now? The Solana ETF is expected to be in play at some point. Ethereum ETF passed earlier this year. Certainly, we've seen some resurgence in Ethereum interest in the last couple of months with the prices surging the way that they have. What is institutional money doing right now that Bitcoin has already run up? Will they continue to flow into Bitcoin, or can we see a rotation?
I don't know if I'd say rotation, but I think we could see more flows going into Ethereum and Solana in particular. As well as maybe some surprise assets. I think Hype from Hyperliquid's getting a lot of institutional interest, both in terms of DATs and beyond. So I think we could see some surprise plays as well. But I think it's really going to be the major alts that are, 50 to 100 billion plus in market cap, that have the capacity to even receive institutional capital at this point. Everything else, I think, is probably not going to get a bid in the short run, and it's really contained those majors.
Okay, so let's just jump back into stablecoins, or more broadly speaking, the general themes for crypto and DeFi into 2026. What do you think are the major, I guess, a catalyst for adoption or themes that investors should be paying attention to into the next year? And how do these themes differ from, let's say, a few years ago when we had a bull market in 2021?
Yeah, so I think a few years ago, stablecoin adoption was mostly driven by being CEX collateral, so that you could deposit it as a pair to get, a loan on your crypto on chain, or deposit to do perps trading. I think what we're going to see now is more off-chain, or rather more like retail merchant-based adoption. So we're seeing Stripe and Paradigm partner to launch the Tempo chain, which is a stablecoins focused chain that's going to probably integrate all of Stripe's underlying payments technology. We're seeing Circle launch Arc, which is another stable chain. Tether launch Plasma. I think we're going to see just merchants and e-commerce really starting to adopt stablecoins. I think that's going to be the largest driver, in addition to just general growth in international remittances and just cross-border payments. Also seeing like Shopify, for example, heavily integrate stablecoin. So I think that's where the growth is really going to be driven from next year. But across the board, I expect to see growth in stablecoin volumes.
How are stable coins going to help, let's say, countries experiencing very high inflation?
Yeah. So in our state of stablecoins report, Messari, I think we cited over 22 countries experienced 10% inflation or higher, and some are over 25% annually. Um, I think based on that, we're gonna see more and more stablecoin adoption. As you know, the U.S. government makes it easier to access stablecoins, as more liquidity comes on chain, as people start, owning wallets in countries all over the world. I think it's natural that we'll see increasing stablecoin adoption from there.
Let's just walk through this. Let's say we have Argentina, for example, which has double-digit inflation. They issue a stable coin. What happens next? How will that help people who are, suffering from high inflation in Argentina?
Are you saying if Argentina issues a stablecoin, or if people start
Yes.
thinking? Um,
Is that what you're trying to? I'm trying to extrapolate what you're trying to say. So, are
Gotcha.
you saying nation states are going to issue stable coins to combat inflation, or do you think people should just buy U.S. dollar-backed stable coins to help themselves if they're in a country with high inflation?
Yeah, well, what I was referring to is buying U.S. dollar
Oh, I see.
stablecoins. I
Okay,
don't expect to see. I mean, we could see states issue stablecoins for their native assets, but I don't think that's
I
gonna
see.
that's really what their own citizens want in high inflation countries.
Well, one of the trends that are appearing right now is the yield-bearing stablecoins that are pretty interesting to a lot of investors. Now, on the one hand, I as somebody who wants yield, I would not park my money in a non-yielding deposit or checking account in the bank and put it in a yield-bearing stablecoin somewhere on a centralized exchange. However, memories of Celsius still linger in my mind. I want to know how these stablecoin products generate yield. Are they done so safely? What guarantees do I have as an investor?
Yeah, so I think receiving stablecoin yield on the US dollar is a bit an illegal gray area, especially since it's explicitly stated that it can't happen in the US under the Genius Act. There are a lot of workarounds with like offshore payments for yield, but I think a lot of stablecoin issuers are very hesitant to do so. What I think we'll see instead are different kinds of workarounds. So, for example, loyalty programs that will, pay you out for usage of stablecoins, but not directly from yield. So it could be points towards, kind of similar to a credit card rewards program. And I think that's how yield and rewards will be more indirectly distributed going forward. And I think that's what stablecoin issuers are really starting to think about. How can we onboard brands to kind of replicate credit card like effects for loyalty, and that can provide those rewards and indirectly yield that we can't really do right now under the Genius Act.
And then finally, Dylan, what is the next piece of evolution following the Genius Act? In other words, what is the SEC collectively with the White House and perhaps even the Federal Reserve doing now that the administration is more pro-crypto? What can we expect for the next major piece of legislation, in other words?
Yeah, I expect further stablecoin regulations, further clarifying some of these outstanding issues. I also think we'll see a lot of tokenization regulation. So how do equities work on chain? How do you get real estate on chain? What are there are lots of probably thousands of small questions and details that need to be answered, and I think that's where the industry is really heading. Um, Aside from that, I think, the questions are we actually going to continue with an implementation of like a national Bitcoin strategic reserve? How do we think about crypto native assets aside from Bitcoin? Is there more regulation needed on that front? So I think like we're going to see a smattering across the board, but I think it's still going to be more stablecoin and tokenized asset related in the short term future.
Okay, and then a final question before I let you go. If you had to make a guess, of course we're all just guessing here, but if you had to make a guess between which will outperform for the next couple of months, Bitcoin or the altcoin market, what would you guess?
My personal guess would be the altcoin market, driven by institutional flows through DATs and ETFs, and Ethereum, Solana, and a few others. And I think Bitcoin will remain steady or even appreciate, but I think altcoins stand to have stronger catalysts in the short run.
Excellent. Thank you very much, Dylan. And where can we learn more from you and your work at Messari?
Yeah, either check out Messari.io on our research portal or on X at Dylan G. Bane.
We'll put the link down below, so make sure to follow Dylan and Messari there. Appreciate it, Dylan. Good to meet you. Thank you for coming on the show, and we'll speak to you again soon.
Yeah, thanks so much for having me on.
Thank you for watching. Don't forget to like and subscribe.